This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com.
Hey everybody, this is Jonah Lupton. Welcome to the Investing with the Whales podcast. So this is sort of the first episode of the relaunch with Marty Chargin. I get that right, Marty?
You did. Great job.
Where are you based out of?
Most people say Chargin, like, my wife charges the credit card to buy stuff every day on Amazon. I'm in Southern Arizona, about 30 minutes north of Tucson. Nice,
cool. Okay.
Quiet little community, Oro Valley, really nice.
So what is it like? You're on the West Coast, market opens up at 9:30 in the morning on the East Coast. I mean, what time do you typically get up in the morning?
Yeah, I used to live in California for like 62 years, and then I moved out here like 3 years ago, and it is 6:30, but in Arizona, we don't change the times.
Oh,
So
okay.
now it's like 9:30 your time is 7:30 our times.
Okay.
But we're going to switch. We're going to move forward here pretty soon, right? So I'll be back on Pacific time. So yeah, 6:30 the market opens. So I get up early to prepare for the day. Yeah, real early.
Now, how would you describe your investment or trader strategy? I mean, you are more of a trader than an investor, right?
Yeah, I have a service which is all growth stock trading, but for my personal life and my retirement, those are long-term investments that I've had for many, many years. So I do both long-term investing, portfolio planning, and then, the trading. I did day trading for a long time. And then now it's more like I try to do position trading and trend trading, but this market has not allowed me to do that. So now it's turned me more into a swing trader and a day trader.
How would you describe what's a position trader versus, I mean, a day trader? I think we all understand what that is. Swing trader is typically maybe a 2 or 3 day swing.
Yeah.
What's a position trader doing?
Like a good growth stock in a healthy market, you should be able to buy at a proper area and, add incremental adds along the way as it trends higher. That's the term trend trading. Normally, a good growth stock and a good healthy market will last 12 to 24 months. So, you can hit, 2 to 5 to 10 baggers in a 2-year period, if you hit it right.
Which is what 2020 and 2021 was giving us.
Yeah, 2020. Now, a lot of traders came in 2020, Jonah, right? I mean, and then they got disillusioned because it was so easy. There was so much liquidity. The monetary and fiscal, policies were very accommodative. And now it's kind of the opposite. So they're disillusioned a little bit on how easy it was. And trading is not that easy at all. You know that.
This does feel like, I agree, an unhealthy, choppy market that really can't figure out which direction it wants to go. There's macro data, there's FOMC officials, and this, we were up this morning, then we were down 200 points, and then we finished up. I mean, you really just can't predict what this market does day to day. So how does your style change in that? You said you're more of a day trader. Are you taking smaller positions, tighter stop losses, or are you just sitting on your hands and sitting on some cash and willing to wait a few days, a few weeks, or a few months?
Yeah, this market, well, 2022 obviously is different than 2023. The 2023 has been pretty good, I would say, and definitely change of character in 2023. But in 2022, if you go back to last year, a lot of our growth stocks were getting hammered, sold off. It's just the XLE, the oil and gas ETF was up 50%. It was the only game in town. And I was in it for a while, and then I left it last summer, and I kind of just day traded here and there and didn't really do a whole lot because things weren't going, as I need them to, right? So 2023 has changed a little bit. So now you can, at least I think you can buy stocks and hold them a larger position, and you can hold them a little longer. But if you wait too long and don't have, proper discipline and sell techniques, they're going to burn you. They're going to come back and they're going to, you're going to lose some profits, put it that way.
Right.
But I have seen recently, you saw it today, was a lot of the stocks are pulling back to, a lot of the leading stocks are pulling back to moving averages and finding support and bouncing. We saw that with a ton of semiconductor stocks today and some of the pipeline stocks. And we talked earlier about the medical product stocks that really bounced nicely. So it's a stock picker's market. there's pockets of strength that you can do well with, but there's a lot of landmines out there. I will say though, that if I was short and we have all this negative news and they can't push it down, like the S&P's been around 4,000 for 6 or 7 months. It trades a little above it and a little below it, but it's right around 4,000 for like 6 or 7 months. But if you're short and you have all this negative news and they can't push it lower, that tells me that it's got to go the other way, or at least flat. Now, I would be very frustrated if I was short and all this negative news comes out and it won't go lower. It refuses to go lower.
Yields are going up. Every FOMC official sounds hawkish. You got
Higher
war,
for longer,
you got China.
Yeah.
Everyone's talking about recession and earnings declines and layoffs, and yet the market is holding up pretty well right now.
A lot of the macro people, I think that COVID kind of disrupted their models a little bit too. And what happened in the past is not necessarily going to happen now. And obviously technology makes things more efficient too. We can talk about AI if you want.
Oh,
but But I think also, go ahead.
What are some stocks that you think are potential leaders right now that you are looking to buy on pullbacks? And where's your favorite spot to buy? Is it pulling back to the 10-day, the 21, the 50?
Well, each stock has their own character, right? And I bought the ACLS, which is a semiconductor stock. I'm sure you're familiar with it, at 80, and then it went up to 88, and then I bought, 10% gain. I took it, then it came back to 80 again. I said, well, I'm going to take another swing at this thing, and it just took off, went to like 120. And that thing pulled back today, I believe, to its 10, or it might have been the 21. But that's the only opportunity that's really given you, a 2 or 3 day pullback. And so leaders have emerged and they're sticking out. There's not a lot of them, but
no, there's not.
LGM,
some of the beauty companies like ULTA, ELF, like they look like leaders because they're not giving you many pullbacks to get in either.
No, they're not. I listened, or I read the Dillard's press release from their recent earnings, and they said that the cosmetics category was their leading category. Because
never underestimate a woman's willingness to spend money on makeup. I don't want to talk about vanity, but I live in Boston, and there's a Sephora down the street, and every time I walk by the Sephora, the place is always packed. Whether it's 10 in the morning or 9 at night.
Ulta Beauty. The stock is just a beauty. It keeps making new highs. Talk about a trend trader. If you look at that chart, I don't have the ability to share charts here.
I can share.
Just pull up Ulta Beauty. That's a trend trader's dream.
So you should be able to share your screen if you want.
Is that right?
Yep.
Let me see. I do a screen share. There's Ulta. Where's the screen share here?
I'm not sure. Yeah, there you go.
So I can share that. Can you see that?
Yep, I see Ulta Beauty right now on the screen.
Obviously here it had this little, base, double bottom base here. And of course the market sucked, this is last summer and then back into October when the NASDAQ made its low. But since then, this thing has just been ripping higher. And if you're trying to get in, where do you buy this thing, right?
Is that the 10-day that it's been riding pretty tight?
Yeah, the green line is the 10-day, and it just bounced off it this week, right? It just comes down, and that's a beautiful trend. So like I say, where do you buy this thing?
Right, agreed.
Just on pullbacks, right? Yeah.
So if this is a stock that you're trying to get into and it pulls back to the 10 and you start a position, do you typically put a stop loss right below the 10?
Yeah, definitely. Yeah, it's just a trade. That's real risky. This is extended, and if you're just going to trade it, I don't own it. I didn't trade it. I haven't bought it, but that's a beauty. That's what I'm looking for right there.
Right.
And you had mentioned ELF earlier.
Yep.
And, ELF. So I can see it. I'm going to move it down a little bit here. Obviously it just gaps up on earnings every 3 months. It has these gaps, stair stepping, right? And now it just pulled back to the 10 this week as well, and found support. So, those are leaders, right? I hate using that term, but those are strong stocks that you want to be in, right?
When stocks like this pull back to their 10,
there's
not that much resistance above it versus sometimes when a leading stock pulls back to the 21 or the 50, it then has to work its way back up through, a bunch of the shorter moving averages, which could be resistance. Is that a concern for you, or?
Yeah, definitely. There's one stock here that I like, and this is shift for payments, and this thing consolidated as well. Then it broke out, right? And then it fell last week with the earnings from TOST, and it's in the same category, but I think they're taking market share. And anyway, it's below the 50, right? So I'm looking for this thing to trade through the 50 and through these, these 10 and 21 that are curling down. That's always a caution sign. But they have earnings next week. I think they're gonna do well. Another concern though is the overhead supply, right, on the weekly. I mean, this thing hit the ground running on the IPO, and now it's formed this base. And it broke out of the stage 1 base and pulled back. So I think this pullback is a chance, an opportunity to, if you're not in, to buy. I'd like to see it trade right through that 50 and get above that area, and then that would be my stop.
I own this one in my investment portfolio. It's up about 100% from the summer lows.
Yeah, good for you, Jonah.
Really, really strong company and decent valuation, nice margins. They do a lot. Like you said, the stock probably did sell off last week because of Toast, because they're in the restaurant and hospitality industry.
Yeah, it's got a big PE or whatever, but the sales, sales come before earnings, right? It's got, over 2 billion in sales, and it's got a 4 billion market cap. So it's 2 times sales. And if it's taking share, as we suspect it is, that 2 or 2.5 billion is going to be 5 billion pretty soon. So the market cap should go up with it. So,
and they're also getting into stadiums. They did a deal with Starlink. So they're going after what they call sexy sectors.
Yeah. Yeah. I see it bars and restaurants where I frequent.
Oh, right? Yeah. I mean, it is a competitive industry, but they've been around for a long time.
Yeah.
So they do have a big chunk of the market.
Yeah. And there's, there was a Flywire, and there's just a lot of companies, but I think they're taking share. Shift for Payments is taking share. We'll find out. They have earnings next week. So
now, when you're investing in companies that you call growth stocks, what sort of do you look more at revenues, earnings, PE multiples, earnings growth? Like what are you focused on? It's probably all of that, but how do you prioritize it?
Yeah, I don't really care. With the growth stock, you really can't look at PE. That's more for value stocks. I look at, sales growth first. They've got to have the sales, because sales comes before earnings, right? I mean, when you're growing, a young company's growing, they're going to spend a lot of money, right? Just to get that cap. I mean, they talked about Amazon for years being overvalued, right? It was overvalued for 20 years. And, I think people who owned it are pretty happy with that. I mean, young companies like Bros is another one that a lot of people are into. They're growing like crazy. They're building all over the place. So they're spending a lot of money just to get the revenue. So the earnings come after the revenue.
Which is exactly what happened to Uber. We were talking to Uber before.
Yeah.
They spent 10 years investing and building the company and the platform and getting the drivers and whatnot, acquiring customers. And now we start to see the earnings come through and the free cash flow.
Right. I like Uber a lot. And these earnings will, you could see there was negative. Now they're positive, but they're, they just did what, 8.6 billion and 8.3 billion in revenues, the last couple of quarters, so it does have a big market cap, 68 billion, but I mean, they're doing, 35 billion just in revenues, so they're taking market share from Lyft, no doubt about it.
Oh yeah. And I think Doris said that they can get to, I think it's like 6 or 7 billion of EBITDA in the next few years, and a lot of that should come down to the bottom line. So, this is the kind of company that you're going to see 50 to 100% free cash flow growth for the next few years.
Yeah. See, to me, this is the exciting stuff about, researching stocks, Jonah, like you understand the story, and you find out how they're doing and where the future growth is coming from. And you see your money grow, month after month, year after year, that's the exciting part. Like we talked about, some of the biotech stocks are down 50% in a night, that's not fun, but to me, these are the fun stories to research and watch them grow. I think Uber is definitely one that will do well over time.
Now, what's a typical position size for you in terms of percent of your portfolio? Is it 5%, 10%?
Yeah, 5% would be half a position, 10% would be a full. In a healthy market, I'd like to have about 10 stocks at 10%, which would be 100% invested. You know, usually I'm about 8 stocks though.
Okay.
And,
In a bull market, will you go above 100% invested?
no, I'm too old for that. I don't do margin or anything like that, but you know, I will play options. If I have a good stock that's trending nicely, you know, I'll buy, you know, some calls, you know, forward calls on, you know, stocks that I like that are doing well. But this is not the market for that, I don't think.
Oh, no. Oh, hell no. I mean, I was back in early January when the market was ripping. I got up to 130% invested, but I got stopped out, you know, pretty quickly. And I mean, now I'm at 5% right now. After the last couple of days, I just got stopped out of everything, and I was probably over trading, and I don't want to do that. So I'd rather just sit on my hands for a couple of days.
Yeah, that's whenever I have a couple of losses, I just take a timeout and sit back, like reassess, what am I doing wrong? You know,
January, the market's just not healthy right now. You know, even the stocks that are breaking out, those breakouts are failing pretty fast.
Yes. Yeah. Yeah, I don't want to go through all of them, but yeah, I definitely monitor those gaps, and they were doing well, and now they're kind of struggling. So, but you know, the Nasdaq was up 14% in January, so it pulls back 7%. That's a normal pullback.
Yeah.
So to me, it's like I said, if I was short and with all the bad news and the Nasdaq's acting the way it was, I would be very frustrated, because you know, next year, pretty soon, you know, by the time we get to spring and summer, you know, we're going to be looking at 2024 numbers, and, you know, the comps are going to be pretty easy. And if they can't drive this thing down any further, going forward, the numbers are going to be, you know, a little easier. I know the Fed's raising rates and the macro is terrible and doom and gloom is coming, but I think if they can't push this thing down by summer, it's going to have to go the other way.
But the good news is we all know the Fed is pretty close to the end of their, you know, rate hiking cycle. At least we think so. Well, we've been saying that for 6 months. So,
well, but Jerome Powell, the Fed chair, he reads Paul Volcker's stuff. So I think he wants to be the next Paul Volcker.
now, when what's your process for looking for stocks? I know you use MarketSmith a lot. Do you run specific screens? Do you try to come up with like an investment thesis for which sectors you think will perform the best over the next 6 months, and then look for stocks in those sectors? How do you do it?
Oh man, it really depends on the market. Like January is kind of momentum, right? So I was just looking for momentum stocks. Stock was relative strength. I wanted to jump on stocks that were, you know, trading higher, and you know, it just changes. You know, you got to change with the market, right? But typically, I mean, typically I want stocks that are, you know, generating 20, 30, 40% accelerating sales growth, right? To me, that's the most important thing. And then if they could just have steady earnings, 15, 20%, 25% earnings growth, that's a good start for me. And that'll narrow it down. If you have relative strength and EPS strength, that's going to narrow it down to probably 100 stocks, or probably even less, you know, right now, because there's just, you know, there's not that much strength going.
When you start a new position, so let's say for Uber, I mean, any of these stocks I know that you're looking at, let's say you start a new position in Uber at 35, where would you typically put your stop loss? What sort of a loss are you willing to take on a new position?
Okay, I just bought Uber here. You can see this MarketSmith has got this pattern recognition here. So it had this little buy point there at 31.20. I got in a little bit earlier here. Not this thing, this big glitch day. That thing.
Oh yeah, that was insane.
A lot of charts have this. It's like you just got to put your finger over it and kind of ignore it. Yeah, it kind of traded you know, back to its 10 here, and I think this was before earnings, because the earnings were really good, and then it broke out. And so, yeah, I'm just riding this thing. It's doing nothing wrong. You know, I have a half a position in it, which is 5%. I'd be willing to add over time if the market cooperates, because like we talked about, I think this could be a kind of a big winner, you know, a 2-bagger maybe from here over time, maybe the next 12 months, but you know, everything's got to cooperate. Right. But as long as it's above that 21, I'm not going to sell or If it has a day like that.
How, I mean, I've never seen anything in 20 years. I've never seen anything like that. That
Yeah,
was
I
just
don't
wild.
know. What was the reason for that? There was a glitch, they said, or
Yeah, a glitch. I mean, I don't know what happened to the orders that got filled and stop orders that, people got stopped out of stuff. I mean, I don't know how they fixed all that mess.
but they were legitimate trades, and that's why they
Right.
changed the the charts.
Yep,
So
the candles are on there. Yep.
yeah,
I think it happened to like 100 stocks too. So as I'm going through my charts every morning, I see these big weird candles on a bunch of them.
Yeah.
What are your thought for holding stocks into earnings?
Well, if you're gonna have a big winner, you're gonna have to hold through earnings. 6 or 8 or 10 earnings calls. So, and if a stock's taking market share like we think Uber is, then an earnings call should be a chance to show off and show everybody that you're taking market share. So
So I mean, there are traders out there that are really just focused on the technicals that really don't want to hold stuff into earnings.
Yeah, I get that because you
Yeah.
get crushed, right? I mean, it's a big risk, absolutely. I have a formula, Jonah, that if you take the stock's worst day in the past year, so say it was down like 10%. That was the worst day. So you take that and you add a 5% stop loss, that would be 15%. So if you have a 15% cushion going into an earnings call, then you should be able to hold that stock. And hopefully it won't have its worst day in a year.
Right.
But if you do the research and you have a pretty good idea of the stock, like I just held CROX through earnings because I'm pretty confident that they're doing well, right? And then
I got my Crocs on right now.
we just showed ELF. I mean, every quarter ELF gaps up, and so you're missing out if you're selling out and missing out on that big jump, right? Then you're missing all the gains.
Right. I mean, this is the same thing with Upstart a couple of years ago. I mean, if you held that through earnings, you were rewarded. Yeah. If you tried to trade it around earnings, you didn't really make any money.
Yeah, if you sell and then buy after earnings, like I mean, like you just mentioned LNTH, right? I mean, if you're not holding that stock, then you miss out on what, a 20% gain today.
Right. Right. Now you're chasing it 20% higher and hoping that it rallies into the next quarter's earnings. But yeah, you've already missed most of the gain.
Yeah, that's a beautiful candle, by the way.
Incredible. Yeah. I mean, TMDX looks pretty good too.
Yeah, that's another one of a stock that I learned about from.
Whew, look at that.
Look at that, baby.
The problem is, where do I trim it? I mean, I love the company. They're growing fast.
That's another thing, when you have a stock and over time it grows and grows, it becomes a bigger part of your portfolio, right? So you have to trim some along the way, which is fine. That's a good problem to have, by the way.
Do you have any strict disciplines or rules around trading? I mean, around trimming?
Yeah, I don't like a stock to get, like more than 15% of my portfolio. Like if it's 10%, it grows to 15, I like to trim a little bit.
Okay.
But if it's a winner, I don't want to trim my winners and buy laggards, right?
And what about I'm sorry. If you are bullish on a stock going into earnings and then they disappoint and the stock gaps down or moves lower, what are your sell disciplines around that? If the fundamentals aren't holding up the way that you thought they would.
Yeah, well, if the story's done, well, then it's done, right? I mean, when it's over, it's over, so you just have to say goodbye. But sometimes, like a stock will have good earnings and a good report and it'll just drop. Well, I've seen some really strange action around earnings recently. Gosh, was it Airbnb? They had a real strong earnings report
and then pulled back. Yeah,
and just pulled back here. It's like, okay. And then we just mentioned CROX, right?
Yep.
Thing went up to 143 one day and it was bound at 118, 2 days later. I mean, that's really strange action.
I agree. I mean, I owned a few. Look at Shockwave. Shockwave was up over 20% after reported earnings and then came all the way back.
Yeah. So
very frustrating when you own it.
Well, that's just, the market that we're in, right? I mean, I showed my group the S&P, it's just, if you just take a line along 4,000 here since about last May, I mean, it's gone nowhere.
Yep.
4,000. I mean, it goes up, great. Sell the rip, buy the dip, sell the rip, or
And
short the rip.
that's why they say a choppy market is better for traders than investors.
That's what I was saying earlier. Yeah, this is good for day trading, swing trading, but terrible for position or, trend traders. There's no trend there. It's just sideways. Sideways is the trend. So,
and it is hard. Do you think everyone wants those triple digit years. You think it's hard to do that as a day trader? You really need a better market with bigger, positions that you're able to hold longer?
Yeah. Day trading is just nickel and diming. I mean, sure, you can be good at it and make money on it, but it's a lot of work. It's a lot of attention to detail. You really got to be focused. That's
what I'm doing right now. I wake up at 4:30 in the morning and I spend 2 hours going through 200 charts, just trying to find some potential breakouts where I can scalp, 2, 3, 4% on a breakout, knowing that that's all I'm going to get, because as soon as you got 3 or 4%, the sellers come in and whack it down.
Right. That's the market that we have. So you got to play the hand that's dealt, right? Yeah. So that is frustrating. It's I don't think there's any day traders on the Forbes 400, wealthiest people. I think they've just held things for a long time. They've owned, really quality, or they, like Jeff Bezos, they just created great companies, or Elon Musk, right?
What are some of the stocks in your portfolio right now? Are you able to talk about any of them?
Yeah. Well, obviously CROX is one.
How long have you owned CROX for?
Since about 80. It went down to 40 last year, and I knew the story was good. I knew that
crazy, man. I was getting trolled in my own stock Twitch room because I was telling people to add to their position under 50.
Well, this is because it's easy to hate because it's an ugly product for the most part, And then they bought Hey Dude back in, I don't know, the end of 21.
Late 2021 for $2.5 billion, $3.5 billion, yeah.
So right before the Fed started raising interest rates, they incurred a ton of debt. Right. So Wall Street hated that, right? They got $2 billion in debt, and now they've paid off a quarter of it. And once they get down to 2 to 1 on it, they can reinsert their. They have $1 billion buyback program that they're going to start up this summer once they get the debt note down. Okay. And I just saw yesterday where they asked, "Why don't you do a secondary and just pay it off?" Because they don't want to dilute the shares. So I thought that was great that the CEO did that. But the story, it's a story stock, right? It came down to 46 and people hated it. They hate the clogs. The Hey Dude, they paid too much. But then it got into this consolidation and broke out right here around 80. And that's when I got in. And I added when it pulled back to the 50 just a couple weeks ago. And then it went up. This is before earnings too. So I have conviction in this stock.
But Hey Dude, I own the stock from, I don't know, I bought it at 100, I averaged down to 50, and then it rallied about 160% off those summer lows. So I finally sold it around 120 in late January. So I didn't hold it into earnings. But yeah, it's an earnings story. The company is very, very profitable, trading at like 10 or 11, 12 times earnings. Once they pay down this debt, they're going to be buying back a lot of stock. Yeah. And, that's the kind of stock that, they could retire half of their outstanding shares over the next 3 or 4 years.
Yeah. Congratulations on the trade, by the way. That's a great trade.
It worked out pretty well. I did wish I held it into earnings, on that 14% gap up. That would have been nice.
Yeah. I was listening to their conference call, and they've been a 57% CAGR for the last 5 years, which is pretty decent. That's incredible. They're sold in like 110 countries. I know people say, "Oh, I saw one at the airport. I saw them here." They're sold in 110 countries. This is not a small company.
Oh no, I see them everywhere. 10 years ago, the company was, practically a penny stock.
Well, their management now is completely different.
Oh yeah.
This guy's clued in. He's really savvy.
They got, I know they had some celebrities endorsing the product that helped spark things along. The one complaint I have about CROX is they don't have any sports. I don't know what the right word is. Licensing deals. Right? I would love a pair of CROX with my Red Sox, my Patriots, my Celtics. Yeah. It seems like such a no-brainer. Like every college kid would have a pair of CROX with their alma mater on it.
Yeah, isn't that costly though, the
Oh
licensing?
yeah, it's expensive.
Yeah, to get in with the NFL, I would imagine they'd be paying a lot.
Probably, I would think that it would pay for itself, though. I mean, there's plenty of companies out there that have these licensing deals and sell, T-shirts and hoodies and hats and whatnot. So, I mean, the economics must work at some point. I mean, I assume CROX has looked into it. It just, to me, it just seems so obvious.
Yeah, and they probably just don't want to pay that much for it. But I think Hey Dude will eventually, I shouldn't say it will outsell CROX, but I think it's going to be definitely growing faster than the CROX. Yeah.
I think people finally came around to the idea that buying Hey Dude was actually a good acquisition.
Yeah, I think that's
at a pretty fair price.
Yeah, that changed the character of the stock, right? Yep. It's like, gosh, he just said at the last call that it did $1 billion in its first year, right?
And it's growing like 4 or 5 times faster than the core CROX brand.
And they're only in like a few countries. I mean, yeah. So they've got a lot of international growth. I don't know if you want to rely on international growth, but I mean, they're in, like I said, they're in 110 countries. They have a lot of selections. But like I say, this is the type of stock where I say, well, if it's growing at this rate and they're earning that much, it should be 160 this year and maybe 200 next year, so I'm going to hang on until the story changes. I don't know, maybe the story will change, but
what are a few other stocks on either in your portfolio or on your watch list?
Their management team is doing well. Alpha is another one. We talked about that one for obvious reasons. I mean, it just this is not like CROX. This is an expensive stock.
Right.
You take a look at the revenues here. I mean, but it's got a market cap of near 4 billion with 500 million in sales, so this is a growth story growing really fast. So management has to execute because there's a lot of growth priced in already. But, as long as now this is where you're a technical person, right? So as long as this, stock trends in the right direction, it stays above the 50. You can see it sold off below the 50 and then it traded right through it, back in January. So to me, this is more technical than fundamental. So I'm not as convinced, or I don't have much conviction. It was Alpha as I do with CROX because it doesn't have the fundamental story. But as long as those technicals remain the same, this thing is flashing. This is a winner, right? A big winner.
Do you typically like buying stocks after gap ups, or don't you like it? Because you feel like all the money's been made, or do you think, well, if they gapped up once, it's because they crushed numbers, and those are the types of companies that typically crush numbers again, like LNTH did last year. Yeah,
they kind of sandbag, right? And they beat quarter after quarter after quarter, and they kind of stair step. They go up and they flatten out. They go up, they flatten out, and so every time they get a new data point, the stock appreciates. But it depends on the market, Jonah. Like in 2020, we talked about like Twilio. If you go back to like I think it was May 12th of 2020, there was like 10 stocks that reported earnings, like Fastly and Twilio, and they all gapped up. And if you bought those gaps, Livongo was one. If you bought those gaps on that day, you would have done really well for yourself. So it depends on the market. If it's a strong, uptrending market, you can buy those gaps. But I definitely monitor them to see how they perform and if they're supported at moving averages. But in a market like this, I would not jump in, just blindly buy like what NVIDIA gapped up nice today. And I think Square might gap up tomorrow. And you mentioned TMDX and LNTH today, but I think it'd be kind of that's a high risk trade to be buying them in this market.
Well, look at a lot of the cloud stocks, the Palantir, Airbnb, Shopify, they all gapped up and they've all given it all back.
It just came right back. Exactly. So, I'd say the odds are against you. The risk reward is not on your side there, but you definitely want to monitor it, right? Because like I said, if Airbnb comes back to a moving average, say the 21, where a lot of stocks found support and they get support, then maybe that's a place you can buy, if you miss miss buying it earlier.
Do you do any?
Go ahead.
Do you do any international stocks, or typically stick to just U.S.?
U.S. I have enough trouble just monitoring the U.S. stocks.
And do you ever do ETFs, or is it all individual stocks?
No, I like stocks. Like we mentioned, I talked to you before about the XBI. A lot of people like that because biotechs, you know, the outhouse or the penthouse, and nobody likes being in the outhouse. So you just buy the exchange traded fund, which has done pretty well. You know, I think it bottomed here. If you look at the weekly on this thing, and I think biotech's going to do well this year. It's just kind of stalled. You can see this waterfall pattern and capitulation selling, and then it kind of had a nice summer last summer. Now it's formed this little base, but it just can't break out above this, you know, what is it, 92 level? It's a nice chart, you know, nice technically, but I don't know. Biotech.
You've been investing for, I think your website says since the 70s.
Well, my dad, I was a kid in the 70s. My dad bought me stocks, you know, when I was, you know, a kid in the 60s and 70s. He bought me Standard Oil Cal, which turned into Chevron. He bought me IBM. And, you know, my mom still has those stocks. So, you know, you never seen
the dividend yield off of the cost basis is probably like 40-50%.
Yeah. She just has them for the dividend, you know. He was an attorney and he would do cases. And people would pay him in like IBM stock. So he just got stock that way. Yeah. So, yeah, he's been deceased for like 2000.
Sorry to hear that.
No, that, you know, life goes on. But my mom definitely loves getting those dividend checks.
Do you do it? I mean, do you do anything with dividend stocks?
Yeah. I bought about, I don't know, 8 stocks over time, and I've added some, you know, like Waste Management and Bristol Myers and General Mills. They don't do much. Target, they don't do much, but you know, I get the dividend check, and that's just kind of like a, you know, to honor my dad. That's the way he taught me, you know.
So
but I'm more of a growth stock trader, you know.
You said you do some stuff with options. Is it short-term stuff, long-term?
Yeah, because you know the decay on the time is crazy. It's only in like a stock with real momentum that I have confidence with, that's trading well, and usually in an uptrending market.
Okay,
I'll get a little frisky. That's as opposed to getting on margin, right? That's just because I don't want to get on margin and get into that game. So I'll just, if I want to supercharge my portfolio, that's what I'll do.
And I'm assuming this is not the kind of market where you're probably doing options, right?
No, it's, you know, it could go either way right now, you know, so. Like I said, it's directionless, it's sideways, right? Yeah.
Do you try to make predictions on where you think, you know, the S&P might be in 6 months or 12 months? Do you pay attention to yields and rates, or do you just really focus on, you know, drilling down on the stocks?
Good question, Jonah. You know, I don't like to get into the macro because it'll confuse you. You know, because you see all this negative news, and I've done this before. It's like everything's negative, but the stock's going up. What's going on? So I just try to follow the price action day by day. But I am aware, you know, of, you know, the Fed raising rates and higher for longer, and you don't fight the Fed, right? But
that's a lesson we all learned in the last year.
Yeah, you don't fight the Fed. I mean, yeah. They're real accommodative for, you know, if you look at the NASDAQ and you go to a monthly chart, right? I mean, it had this huge rip, right?
Yeah.
Yeah. And we, you know, they're real accommodative. It was 0 interest rates permanently, ZERP, right? And so now they're taking, you know, a little off the table. And if you look at, you know, just historically, if they go up to 6% interest rates, that's still pretty, it's pretty good, you know, historically, but it's just the rate of the interest rates and how fast they've raised rates. One thing I do watch is the 10-year note, and this thing kind of correlates to the, you know, the growth stocks. So this thing was ripping here, and so it pulled back the last couple of days, and we've kind of, this is right here. It went up during the pullback, right?
Right.
February, it's kind of pulled back since February 2nd. So I definitely watched that. There's a correlation between that 10-year and growth stocks. So I don't want that thing to get above 4.
I got into TMF yesterday. So yeah. TMF is the 3x leveraged version of TLT.
Yeah.
So if you think the 10-year is getting close to topping out, you know, you buy TLT or you buy TLT on steroids, which is TMF.
Yeah.
And, you know, a couple of days ago when the 10-year basically got back to 4% or close to it, you know, starting to position in TMF. And, you know, I don't know how long I'm going to own it, but if we think that we're close to the end of the rate hiking cycle and we get a recession at the end of this year, then rates are going to have to be lower in 6 or 12 months.
Yeah, I don't make predictions. You asked me if I make predictions. I don't make predictions, but you have to have some sort of speculation, right? You have to have some sort of expectation. I would hope that the 4% would be somewhere near the top for the 10-year. I hope, and that's about as much macro as I get. I like to research stocks and invest in stocks and just watch the story unfold, and just do my homework, every day. And
well, it sounds like you dig in a lot more than a lot of other traders, and maybe that's because the swing traders and the day traders, they don't have time to really dig in to all the details. But if you're doing position trading and you're willing to hold a stock for 3 months, 6 months, 9 months, or longer, you got to understand the company a little bit better, I assume.
Yeah, I think if you're going to get into a trend trading or position trading, you better understand the fundamentals. And like I say, where the future growth is coming from, right? Where's this is a stock that I own that I like, and it faked me out here because
this one's been wild recently.
Yeah, there's a short report and it sliced its 50, so that's my rule. Slice the 50, it's audio. Yeah, but then it ran through it, so I bought it back, and it's doing okay. It pulled back to, this is another one, pulled back to the 21, right? Pull back to the 21. So you got to embrace these pullbacks, because what does it do? After it pulls back to the 21, boom, it shoots up, 9% today. So, you can't sit there and cry about a stock that's coming down. It's coming in for you. Embrace the pullback, and load up, and, you got a 9% gain. That's pretty nice. But you got to understand the fundamentals here. And this is it's a data center play, right? Some people say that the data centers are slowing. This thing went up because of the NVIDIA report.
I was just going to say, NVIDIA's proving that, that data center slowdown story incorrect.
Yeah. AMD too, right? Yeah. And of course, you can't have a discussion in 2023 without AI, right?
So have you played any of the AI stocks? Have you bought into that momentum, or is it just too frothy for you?
Yeah, I bought this one in January just because it had so much momentum. But this kind of stuff scares me,
Me too. I'm afraid these are the stocks that are like, they're gonna, you buy it and then it gaps down 10% the next day on.
Yeah, that's what this thing will do. But I do like the leadership, Tom Siebel. He's no fool. And I do like the way this thing's pinching in here a little bit between 20 and 25. So it might have another run, but if it goes to 30, it's probably coming back to 20. And I just can't.
When does AI report earnings next?
Good question. I don't know, but they have much earnings. March 2nd, according to MarketSmith.
Okay.
But I don't know if this is really an earnings story, but gosh, if you listen to Jensen Huang last night, he was talking about this thing's coming on quickly, and replacing, workers, right? And so we have a worker shortage, a labor shortage, and AI can kind of take care of some of that problem,
increase productivity.
Yeah, exactly. So this is important. You don't want to, put it this way, you don't want to ignore a theme like this, because this could really be a big theme for 2023. And if you miss it, you could be missing fortunes here. So I definitely pay attention to it. And there's lots of different ways to play AI, right? I look at Microsoft versus Google. Google's king search, right? Is Bing going to
have like 95% of the market?
Things change over time. GE was once the king, right?
Yahoo, they were talking about this on CNBC yesterday. 20 years ago, Yahoo had a $400 billion market cap and owned search. And now Yahoo just got sold off to some private equity group for literally $4 billion. So a 99% drop in valuation from 20 years ago. Insane.
My wife worked at Yahoo back in the day when Gary Semmel was there. If they would have listened to him, he was going to start a YouTube channel way before YouTube was even thought of. He was a Hollywood guy. They didn't listen to him. The board didn't listen to him, so he quit. And they, Jerry Yang came back, and the story.
Wow.
Yahoo really blew it, man.
I don't think anything else. So how can we find you? I know you run a website called MC Stock
Charts. Yeah, I don't promote it much. It's just kind of my daily routine. I do a report before the market opens, just looking at some stocks that I'm looking, maybe to stocks on the move that I might trade, for a day trade or a swing trade. And then I do a market update at the end of the day, and just kind of keeping people abreast of the market and just looking for ideas. And I have leading stocks, in my portfolio that I like to buy. Oh, I know one that we need to talk about, Jonah, is the weight loss drug, right?
Oh, is that the one that's doing with Lilly, or is this a different company?
The Wegovy drug or Ozempic or whatever. This is NVO. This thing really took off, right?
This is a Denmark company, right? Denmark is Swedish or something.
Yeah. One of my rules that I have is when a stock breaks out of a base, and this had a pretty big base, and it pulls back to the 50 for the first time in a decent market, doesn't have to be a bull market, as long as it's decent, not like 2022. That's a buy for me.
Okay.
Yeah, and CROX did the same thing. There was a couple stocks that I did this with.
So let in terms of NVO, if you're buying that stock and a pullback to the 50, you'll set your stop loss, what, 3-4% below the 50?
I don't set a stop loss here. I'm just kind of watching it. It's just trending higher and just showing no signs of selling, right?
But when you got in,
if I put a stop loss in, Jonah, they'll knock me out.
Well, but when you bought it on the 50, did you buy it once? So it dipped below the 50, you buy it, it got back above, reclaimed the 50, you got in?
It bounced the next day. But definitely, if it trades below the 50, I'd just sell it, right?
Okay.
I know what you're thinking, like, why don't you just take profits now, right?
No, not necessarily. I mean, I'm just wondering, when people jump into new positions at the 50, are they setting a stop loss, or are they just watching it really close? I mean, in your case, if you have 8 to 10 stocks, I mean, you're watching these things all day long. So
so you don't need a stop loss if you're watching it. But ideally, you buy this a breakout out of a base at this proper buy point, right? So you're getting it back here, ideally, right? Which I, didn't do because I, wasn't watching it close enough. I do know the story. So maybe about 122 or whatever. And then this would be an add-on buy point right here around 132.
Okay.
And so, hopefully this story, I mean, gosh, if you look at the weekly and the monthly of this thing's a beast.
And are you typically looking at SMA or EMA?
I use the 10 and 21 EMA, exponential, on stocks that are growing and moving. Yeah, exponential. Yeah.
Yep.
God, there was one other stock that I own that I wanted to talk about, and I forget which one it was. How come I'm drawing a blank here? Darn, Jonah.
Do you do any shorting?
A little bit. Usually when I short, though, I do it with exchange traded funds.
Like the inverse ones?
Yeah, like SQQQ, when Apple and Microsoft and Google and Tesla were all being sold last year. I mean, it looked like mechanical trading, like they were just over-owned, right?
Every day they were going down.
Right. Tesla especially, I mean, this thing was just selling off. I don't know what the heck, just day after day. It's just, but then it found its footing here. And when the calendar changed, its character changed. This thing's been a double, right?
Yep.
So that's why you can't get too negative, right? I mean, people are saying it's going to 50 or 75 or whatever. It's like, take a day at a time.
If you're shorting a high beta name, don't get too greedy.
Yeah, definitely. Yeah.
I mean, I know a lot of guys that were negative on Tesla after it bounced, got back to 140, 150, they were doubling down on their short positions.
Yeah. I wouldn't short, Elon Musk. I think that guy's too bright, it's like, that's like betting against Steve Jobs, I wouldn't do that.
Anything else you want to talk about before we wrap up?
No, man, that's good. I do have that one stock that I wanted to mention because it's just another stock that broke out of a base and traded down to its 50.
Yeah, what was it?
Which is just man, I don't know which one it was. I can't find it now. Doesn't matter. That's just a rule that I have, and that it's worked out for me well, only in an uptrending market, right?
What are we in right now? Are we in an uptrending market? I mean, downtrending or sort of sideways?
I think we're just in a sideways market.
Yeah.
I mean, but like I said, if
like we broke the downtrend, but it doesn't really feel like we're in an uptrend.
Yeah, no, I mean, it stopped going lower. You know, before the market goes higher, it's got to stop going lower, right? So it's just at 4,000. It's just going up and down. That's the, you know, sideways market. You can't get any more sideways than that, right? I mean,
It's sort of, if you're a longer term investor, you use these pullbacks as to add to your top positions, positions, as long as they, in your case, as long as they stay above the 21 or the 50.
Yeah, if you're trading, but yeah, if you're a longer term, the Nasdaq's down 37%, you know, peak to trough. You got to start buying there, right? I mean, chances are, if you look at the the QQQs over time, I mean, 37% down. It only did it a couple of times in the last 25 years, right?
And historically, when you have a year that bad, the next year is usually pretty good.
Yeah, I mean, chances are, it could go down more, sure. But over time, if you're, like you said, longer term, over time, this thing's going to continue to go higher. And that's one thing that, we didn't talk about is your time frames. The investing is all about time frames. If you're younger, I mean, you could take a chance. You could swing at a lot of different stuff and speculate a lot, right? And if you're just putting money in over time, I mean, the S&P and the NASDAQ, and they're going to go higher over time, It's a no-brainer.
Do you like trading IPOs or not so much because they don't really have any track record, character? You kind of have to wait for that to develop.
Yeah, I monitor IPOs, and a lot of the IPOs that came out recently, they're spinoffs, so they've got the support of the mothership. This is an Intel spinoff, right?
And they have a very small float, so it can kind of be manipulated easily.
And the other one was Biohaven is one that I've been watching.
Oh, I haven't heard of that one.
Yeah, this is a Pfizer. Pfizer bought it and spun it off the next day. Its sole purpose is just to generate appreciation here. So it's one that I've been watching but not buying. But yeah, a lot of the recent IPOs, Constellation was another one.
But we haven't gotten a lot. I mean, it's been a pretty dry IPO market for the last year.
One that I watch is NXT. This one just came out, a solar one. It's doing okay. I mean, but
never heard of that one either. Interesting.
Yeah, that one just came out. It's got decent,
I was gonna say, how did the fundamentals look? All right.
Yeah, not too bad, and it's got some liquidity to it. So it's just one that I'm watching.
Was this a pure IPO or a spinoff?
It looks like they had earnings today. I haven't got that far into it. I think it is I think it's an IPO. Yeah.
Okay, I'll have to keep an eye on that.
We haven't had many. We haven't had many at all.
Oh no, it's been dry, very dry.
Yeah, no, I like definitely monitoring the IPOs because every great winning stock, was an IPO at one time, right?
Yep. And there's been some huge winners. I mean, you go back over the last couple of years, and you've had some stocks run 50 to 100% after their IPO, and then sell off when you get to that 6-month lockup. That's typically when you want to get out of them, is before all the shares get unlocked and people start dumping.
Yeah, I had a friend who he started Fresh Choice. It's a restaurant out here on the West Coast, and they had a 6-month lockup, and he sold. Everybody was selling that thing, and some other company got in and took it over, and it just died after a couple of years. The restaurant business is a tough business.
Oh, brutal.
Yeah, it's brutal. Yeah.
Although if you look at Wingstop has a pretty good looking chart.
It was there you go, another one that kind of broke out and then pulled back.
Failed. Yeah, a lot of those. Look at VRT. So I tried buying VRT yesterday on the breakout from earnings, and that thing fell apart too.
Came right back. I wouldn't say it fell apart, it just comes right back, right?
Yeah, it gave back the entire gap up.
Yeah. So you could look at it another way. It's like it's giving you another chance to get in.
True.
Maybe it is foreshadowing where it wants to go.
Right. And it's a little easier buying these stocks after earnings when you have a better picture of what the fundamentals might look like for the next year.
Yeah, and this is what I was talking about. I was just they're bouncing off the 21. A lot of stocks are doing that. I mentioned ACLS, this is bouncing off the 10, and Allegro. These semiconductor stocks are just finding support at their moving averages. So as long as they do that, that's fine. But yeah, it's tough out there, Jonah.
It is very choppy.
Yeah, stay safe.
You too.
I love it though. I know you do too.
Are you in? You're not in Celsius right now, right? I mean, the technicals look like garbage, so I'm assuming you're not.
I am not, because it sliced its 50. I was, but it sliced its 50. But I still keep it, on my in my watch list of about, I have a watch list of a lot of stocks. It's just traded down to its 200.
Yep.
Any stock is going to trade down to its 200 eventually, right?
Yep. I mean, this stock has been a big winner the last couple of years. It needed to digest some of those gains.
Yeah, they need breathers. This is LNTH, right? Big winner in 2022 when everything else was tanking.
Yep.
And now it's just, forming a base. This is looking really nice. Traded below its 200, just taking a breather. Everybody forgets about it, right?
Yep, exactly. Everyone thinks that its best days are in the past, and then it comes out and blows everyone away with some big guidance numbers.
Yeah. I do think though that, what you see with the semiconductor industry doing well, the biotech, the drug stocks doing well. We talked about AI doing well, and some of the retail plays are doing well. I think you're seeing steel, some of the industrials, you're seeing a lot of pockets of strength, in this market.
And energy doing pretty poorly.
That's good. But it had a great,
Oh yeah, huge run.
Yeah, it had a huge run. CVX is one that, I mentioned earlier that my mom owns, thanks to my dad. But look at this run from the COVID lows. I mean,
But if you look at the XLE came back to the 200-day moving average yesterday.
Yeah, this is like what, and it's like a four-bagger for an ETF.
Monster. I mean, you could have bought Oxy back in the early days of the pandemic. You could have bought these stocks. Some of them were in like the single digits.
Yeah, this is the Weinstein, of stage one, then the ascending stage two, and now the stage three. And I'm afraid what's next might be stage four. These start to roll over. Devon was a energy company that I own, and this thing looks like it's starting to roll over.
Yeah, yep.
One of the leaders, they cut their dividends. They top when things look best. When oil was at 120 last year and everything looked great. Now oil's at what, 75? And things aren't so good. They're cutting their dividends, and
the ones that were holding up pretty well were the service stocks like the Schlumberger, Halliburton, Neighbor.
Tidewater's one that
Yep, I've looked at that recently. Yeah, I mean that's still a decent looking chart.
Not bad. It was OII. Oh, wow, this one came back to the 50. Yeah. So I think they're starting to me, this is good, Jonah, that the oil stocks start to, crack and let some other leadership take over, because they had a really strong run for a really long time. Right. People are probably going to be screaming at me like, no, the miners and the commodities are awesome, but they have to take a breather just like every other stock eventually, right?
And if all the energy stocks are on the 52-week high list, the growth stocks probably won't be.
Yeah, then we have a problem. Yeah. Well, it's inflationary too, right?
For sure.
By the way, you said you're in Boston. Like here, our gas prices are back to like when I moved here, 2019 prices. Like
really?
Yeah, like $2.90 a gallon, $3 a gallon. Yeah.
What did it get up to at the peak?
Oh my gosh, it was like $4.50. Yeah.
Ouch. I mean, I went to California and it was like $7.50. At the peak.
Yeah, I went back there last summer to visit family and friends, and it was over $7. Like you fill up my truck with 26 gallons, man. It's like,
I mean, that's what worried me. Dutch Bros reported earnings yesterday or this morning that were a little disappointing. Sweet Green reported earnings today, a little disappointing. And I just think it's because that middle income consumer was getting pinched so much the last year from inflationary pressures that they had to cut back on some of that discretionary spending, fancy coffees and fancy salads.
Boy, I tell you though, Dutch Bros they're building like crazy here in our area.
Oh yeah, they're trying to get to 4,000 locations in the next, I think by like 2030.
Just in the United States, right?
Yep.
Yeah. They have a lot of room for growth, but it's going to take a lot of capex. I was kind of encouraged the way it traded today. I don't own it, but I watch it, and it sliced its 50 and then it traded back, back above. It was down like $6 and it ended up down 4, not bad. 10% loss. That hurts. Oh yeah, okay. Closing range is 45% of the daily, but it closed at its 50. Could have been worse. What I'm saying could have been worse.
Oh, could have been worse. Yeah, I mean, I'd consider that stock below 30. It's not cheap, but like you said, I mean, it is a growth story. I mean, it's the I don't know if it's the next Starbucks, but
No.
I mean, outside of Starbucks, it's got one of the best growth stories in that, sort of restaurant category.
Yeah, it doesn't have to be the next Starbucks, right? I mean, it's got a 5.5 billion market cap, and what's it got? Like, I don't know, 700 million in sales. It's just growing pains of a growing company, right?
Yeah, I think they'll do about $1 billion this year. I think that was their guidance.
In
Pretty close
revenue,
to it.
yeah.
Yeah,
Well,
just below $1 billion.
yeah. Oh, it's going to be some growing pains, and this is still really, it's an IPO, a relatively young company, right?
Yep.
Yeah, so
We know people love their coffee.
definitely.
Just coffee in general.
Have you had Bros coffee, Dutch Bros?
I have. It's good. It's strong.
It's strong.
Yeah,
It is.
which is what I like. Which is what I need.
Well, I think it caters to the younger crowd too, right?
Oh, for sure.
Yeah.
And they have a lot of fancier drinks, higher priced drinks.
Yeah.
And they have a very different business model than Starbucks. They
Definitely. That's what I was saying.
like-
They don't have to
Right.
be Starbucks. Yeah.
Right. I mean, Starbucks is in like very fancy, more expensive, locations, and Dutch Bros has like these little tiny, almost like a pop-up shop in the middle of a parking lot.
Yeah, here in Arizona, it's sunny a lot of, during the year. They have girls standing outside, or should I say attendants? I don't want to offend anyone. They have young ladies that stand outside and take your order because they're so busy.
Interesting. Okay.
You could walk up to the window too, but if you just drive through, they have 2 different lines and it's crowded there. And we have a lot of them. So that's what caught my eye. It's like, wow, this is an IPO it's got a lot of traffic. But, as I dig into the story, it's like they need more revenue, they need more growth, and, they need more earnings, but it's going to take time for them.
Right. Agreed. Okay. Well, let's leave it there, Marty. Thank you so much for your time. Really appreciate it. And best place to find you on Twitter, correct?
Yeah, Marty Chargin, just a Twitter, man. I'm there for my amusement. Have fun. Enjoy. Nothing serious.
Take care, man. Talk to you soon.
Thanks, Jonah.
Got it.